Hello, everyone, and welcome to the launch event for ONFIF's Gender Balance Index. This is one of the most important pieces of research that we do every year at ONFIF. It's certainly one that the team here has a lot of passion for, and it's now in its ninth year. And the good news in the ninth year of the GBI is that on most metrics, scores are getting better. The average scores of central banks, the average scores of commercial banks, the pension funds, and the sovereign funds that are included in the report all have seen their scores rise this year, and female representation is growing in most cases to record levels. But there's a number I'd like you to bear in mind as we have these discussions today, and that number is 14%. 14% is the proportion of institutions covered by our research, more than 330 in total, that have a woman at the head of the institution. After the years that we've had of very well-placed and well-meaning strategies and a lot of focus on improving gender diversity and balance in financial services, 14% remains a very disappointing number. Let's just think of it for a second. What should be 1 in 2 people is actually 1 in 7. 14% is the number we should bear in mind during our discussions today. Every year, we try to improve and refine the research behind the GBI.
Hi, Marty. It's Emma McGarvey calling from ONFIF.
So, Emma, if we could just lose your mic for a second there, thank you. Every year, we try to refine and improve the GBI survey. And this year, we've gone further than before into the levels below the head of the institution. We've looked at what in the private sector might be called the C-suite. We've looked also at the next level, what we'll be looking at an executive committee levels. These are the next levels down from the top, but these are the benches that will populate the top slot in the future. And while there is improvement in this regard as well, it's still poor. In terms of deputy governors or C-suites, 1 step below CEO or governor, only 1 in 5 of those roles are held by women. If you go down more to the executive or board level, it's more like 1 in 3, but there's still what should be 1 and 2 remains 1 in 3. So we will spend quite a lot of time over the next hour and 3/4 or so delving into the reasons for this and what more can be done. All of this information is in the report that which you can download today. We really encourage you to do that, to download it, to read it, digest it, share it, discuss it, give us your feedback. We welcome that. In a little while, my colleague Kat Sita will go through the key findings of the report. Then we'll move to a panel discussion with some very good people who are at the forefront of efforts to improve gender balance, not just within their own institutions, but also the empowerment of women in finance and financial inclusion as well. We look forward to that discussion as well. We're very pleased to be partners today by a number of organizations. Thanks go to our partners at Edge Strategies for their support of the research that we do in today's event. And we're very proud to be associated with the spring meetings of the IMF World Bank, and to have the IMF and the IFC supporting us today and speaking with us. And on that note, I'd like to kick off by inviting for a few welcoming keynote remarks, the Deputy Managing Director of the International Monetary Fund, Antoinette Sayer. Antoinette, over to you.
A very good morning, good afternoon, good evening to everyone, depending on where you're joining us today. And thank you very much for joining us. Let me start by saying that this event on gender balance in the financial sector could not be more timely. Our world has been hit by several shocks, resulting in multiple crises. Just as we were hoping to emerge from the pandemic, the war in Ukraine has added a new level of human tragedy and socio-economic costs everywhere. Women were already bearing the biggest brunt of the pandemic. As primary caregivers at home, they paid the price in the last 2 years with their jobs, their incomes, and economic security. Now, the war in Ukraine is adding to these hardships as food and energy prices skyrocket and families get dislocated. And these crises add to long-standing barriers that prevent women and girls from realizing their full potential. Because of restrictions in laws, asset ownership, labor markets, or access to education, health, and financial services, women still do not fully participate in the global economy. And without gender-inclusive growth, we simply cannot achieve long-term economic resilience. In fact, IMF research shows that closing gender gaps can stimulate growth, strengthen macroeconomic and financial stability, and reduce income inequality. Ensuring gender balance, therefore, ought to be a priority for policymakers as they seek to navigate the current economic challenges. It is a moral issue, of course, but from an economic standpoint, it is also macro-critical. So this is why preventing gender inequalities from worsening further and closing gender gaps are priorities for the fund. We are preparing our first ever strategy to integrate gender issues in the IMF's core work of surveillance, lending, and capacity development. Our strategy focuses on gender concerns that have significant macroeconomic and financial implications for countries. Our goal is to provide granular advice to policymakers on how countries can reduce gender gaps. The strategy will be rolled out gradually, and we will continue to work closely with other partners in this process. I very much want to highlight two such partners with whom we are co-organizing this event. The IFC has been working with the private sector in emerging markets to accelerate financial inclusion through product innovations such as gender bonds. They are applying a gender lens to investments and advise on housing finance, on credit, and on microfinance. AMFIF has focused on gender and diversity in the financial sector for nearly 10 years. And today, it is releasing the 9th edition of its Gender Balance Index, which we are eager to hear about. And we at the IMF contribute to this work. Our financial access survey is unique in providing an annual, publicly available, and comparable global database on access to and use of financial services. It now includes gender disaggregated data, highlighting gaps in financial access by region. Unfortunately, the data showed that the gaps have persisted during the pandemic. The fund has also published important analyses in this area. For instance, our research shows that increasing gender diversity on boards in the financial sector is associated with stronger financial outcomes, reduced risk, and greater financial stability. My colleagues Ratna Sahe and Martin Shehak, who are leading the fund's work on this issue, will share with you some new results. So let me close by acknowledging that policymakers face difficult trade-offs every day, made worse by the war in Ukraine. As they do so, I urge them to consider that gender policies are growth policies, and gender balance, including in leadership, is even more critical in crisis times. Very much hope you will find today's conversation useful, and thank you very much again for joining us.
Thank you very much indeed, Antoinette, and congratulations on the important work that the fund does in this area, and on the launch of the strategy for mainstreaming gender, which now we're going to hear a little bit more about, as well as some of the things that Antoinette mentioned. So it's my pleasure to introduce as our next speaker, Ratna Sahe, who is the Senior Advisor on Gender at the International Monetary Fund. Ratna, over to you.
Thank you very much, Clive. It's a real pleasure to be here with all of you. We've had very fruitful collaboration with the IFC and the OMFIF before, and we are delighted to jointly host another important event again. As we've just heard from our Deputy Managing Director, the need to address gender gaps and reduce inequality has never been more urgent. The COVID-19 pandemic has exacerbated pre-existing gender gaps, and the fallout from the war in Ukraine is adding to the legacy of the pandemic. Over the last 8 years, IMF staff have examined a wide array of factors that drive gender disparities, including education, health, financial access, violence against women, legal barriers, and cultural norms. with our research clearly showing the links between gender inequality and macroeconomic growth and stability, there is increasing recognition at the IMF of the need to take a fresh approach to how the IMF can more effectively support our member countries on reducing gender gaps. In my role as Senior Advisor on Gender at the IMF, I have been tasked with developing the fund's very first strategy for mainstreaming gender at the IMF, which will be discussed by the IMF Executive Board on June 13th. We plan to publish our strategy, so please stay tuned. The proposed strategy starts from the premise that reducing gender disparities and promoting macroeconomic and financial stability is a two-way street. In one direction, improving women's access to opportunities and decision-making roles goes hand in hand with higher economic growth, greater economic and financial stability and resilience, and lower inequality. In the other direction, well-designed fiscal, monetary, and financial policies can support better and more inclusive economic outcomes for the benefit of women and girls. Our proposed strategy also aims to design a consistent and systematic approach for country engagement. The strategy recognizes the importance of expanding collaboration with external stakeholders, such as our co-hosts, among others. That brings me to today's event. Martin Shihak at the IMF and I have been working together on gender, financial inclusion, and macroeconomic and financial outcomes for almost a decade. Martin will present some interesting new results during the panel discussion from our latest research. I also want to note that there is another IMF team which is researching gender balance in central banks on hiring, promotion, integration, and retention of women at all grade levels. That project aims to create and standardize good diversity practices in central banks. Let me conclude here by offering my congratulations to the OMFIF team on the launch of their 9th edition of the Gender Balance Index. I'm eager to hear from our OMFIF colleagues and also very much from the panelists. Thank you, Clive.
Thank you very much indeed, Ratna. Good luck over the next 6 or 7 weeks on the paper. We're all looking forward very much to seeing the detail of it, and I'm sure OMFIF will be happy to be a platform for further discussion in due course. So thank you very much indeed for that. We're going to move on in a second to the presentation of the key findings of the report. It's just worth bearing in mind what we actually do here at OMFIF. The Gender Balance Index has always been based in the representation of women at senior levels in big financial institutions, including the public sector. How institutions look, their own ability to show that they have policies that promote women are important. They inspire internally and externally. So these numbers that you're going to see now are important. We're also, we have the survey this year, which goes into some of the issues that Ratna and Antoinette talked about: data, measuring financial inclusion, the ability of public sector bodies and their private sector partners to improve women's access to finance with all the economic benefits that that brings. So on that note, it's my great pleasure to hand over to my colleague, Kat Busita, who is our Managing Director of Research. Kat, you're going to run through the key findings of the report. Over to you.
Thanks, Clive. Hi, everyone. So I'm here to talk about the key findings from this year's report. As mentioned earlier, this is the 9th edition of the Gender Balance Index, and this allows for some great year-on-year comparisons that we'll get into in a minute. But first off, maybe I can start off by explaining what exactly the index measures. So the Gender Balance Index is a ranking of financial institutions based on how gender balance the top most decision-making bodies within those institutions are. So for most of the institutions that we cover, that's their executive committees and their boards. So we looked at the number of men and women in those positions, and we assigned them a score based on that number, weighted by the level of seniority. So that means that a female CEO or a female central bank governor would have a greater impact on the score as opposed to someone who is a board member or a director general. So the index scoring is based on a database of nearly 6,000 individuals across 335 institutions. It's quite a massive amount of information that we collect on these individuals. The 335 institutions are composed of 185 central banks. This is the most exhaustive, most globally exhaustive category of institutions. And then we have 50 sovereign funds, 50 pension funds, and 50 commercial banks. Because of the sheer number of sovereign funds and pension funds and commercial banks that are in the world, we simply could not cover all of them. But instead, what we have is 50 of the largest of each type of institution selected from each region to ensure that we're looking at the globally representative picture. So what are some of the things that we found? So again, because we conduct this exercise year on year, we're able to track improvements over time. So when it comes to all of the institutions we cover, we see a clear improvement in their scores over the last 5 years. So the most prominent here is the public pension funds. They are the highest scoring institution category, so they have a score of 48. And you'll see that I have a note here about the institutions that we cover, because in the earlier years of the index, we were only able to look at European public pension funds. But in recent years, we've been able to look at other regions, as I explained earlier. It's interesting to note that even with globally representative selection of pension funds, there's still the category that scores the most. So it must say something about that cohort of institutions, that they tend to score better than other institution types. And we discussed that in even more detail in the report. Looking at sovereign funds, these are the worst performing institutions in our index. So they only achieved a score of 21 this year. And historically, they are also the institutions that fare the worst, coming off of a low of 13 back in 2018. With central banks and commercial banks, they're closer to each other in score. Central banks achieve a score of 31 this year. Commercial banks have a score of 35. All four types of institutions have improved over the past year. And that's partly because 135 or 45% of all institutions we track actually improved their scores this year. Now, although that improvement is quite good, the fact is all of these numbers are still far from 100, and 100 is the goal. So 100 is what represents gender balance, and you can see from these numbers that we're still quite far from that. In fact, when we looked at the number of institutions that were able to achieve a score of 70 or better, only 13% or only 42 institutions out of 335 managed to score over 70. A fifth of all institutions scored less than 10, and 10% scored 0. So you might think that 10% is not such a big deal because it's only 34 institutions, but this is actually quite a startling number, because that 34 means that these are 34 institutions that have no women at all in their executive teams or their boards. Now, looking at this database that we've assembled, where exactly are the women? We're able to determine at each level of seniority how much of that, what share do women represent in those cohorts. So looking at all the individuals, all 6,000 individuals in our database, so those who are members of executive committees and boards, 29% are women. Looking just at the deputy governor or C-suite level, so for the C-suite, that usually includes the deputy CEO, chief financial officer, chief operating officer. On that level, only a quarter are women, so just 23%. On the topmost level, so on the level of governors and CEOs, only 14% out of the 335 are women. That represents that 14% represents 46 women who are at the heads of their institutions. So broken down by category. So this is 21 female central bank governors, 13 CEOs of public pension funds, 7 CEOs of commercial banks, and 5 CEOs of sovereign funds. Commercial banks are actually the most improved when it comes to this metric. So last year, there were only 3 female commercial bank CEOs. This year, it's more than doubled to 7, although the number overall is still quite low. A section of our report this year focuses on the women who are the first females to take up the topmost post in their institution. So on the left-hand side, you see some of the first females in central banks. So we have Ida Bolden-Baque of Norges Bank, Rosana Costa of Banco Central de Chile, Victoria Rodriguez Ceja of Banco de Mexico, and Malango Cabedi Mbui of the Banco Central do Congo. They are the first female governors ever for their central banks. We also have Annette Mothman of APG, Cassandra Licknock of CalSTRS. For the commercial banks, we have Helen Wong of OCBC Bank, Miriam Olasanya of GT Bank, Hannah Al Rastamani of the First Abu Dhabi Bank. So we thought that it was worth highlighting some of these groundbreaking women who were the first females to reach the top of their institutions, not just because there are so few of them, but we're also hoping that by highlighting them, they can serve as inspiration to some of our readers who might be working in some of these institutions and help them realize that it is very much possible to reach the top of your organization, even if there's never been a woman holding that post before. If you allow me to talk a little bit more about the female central bank governor. So because we've been doing this for 9 years, and from the very beginning, our focus initially started with central banks. So we have the greatest collection of data for central banks specifically, and this has allowed us to track the number of female governors over the last 9 years. So this is actually the year when more women are leading central banks than ever before. So the number is 21. That's made up of 16 national central banks, the European Central Bank, and 4 of the Federal Reserve banks. This is the highest it's ever been, from a low of 13 back in 2018. In the past year, out of 26 governor appointments, 6 were women replacing men. But the total number only goes up by 3 because there are actually 3 central banks that replace women with men. Aside from looking at the topmost positions, we also look at the types of roles that men and women hold within these executive committees. We look at it using a classification of 2 categories. So one classification is if the role is P&L or revenue generating role. And the second classification is if it's internal or an administrative role. So the shares of the circles that are darker in shade, these are the P&L or revenue generating roles. And those in the lighter shade, those are the internal or administrative facing roles. So based on these charts, you can see that women who are in executive committees are more likely to hold an internal or administrative role versus men. So for men, the range is just about 16 to 17% who are holding administrative roles. For women, it's much larger at about 34 to 41%. What does this tell us? So this tells us that when thinking about the pipeline of individuals who are likely to reach the very top of their organization, there's a higher likelihood that those are individuals who hold revenue generating roles. So just based on this information, you can tell that at the moment, in the institutions we cover, men are more likely to ascend to the top just because there's a greater share of them holding these revenue generating roles. At this point now, I'll shift towards the top scorers in each institution category. So I have here the top 10 scoring central banks. So the top ranked central bank is the Federal Reserve Bank of San Francisco. They achieved a score of 97. Along with the Central Bank of Seychelles and the Serbian National Bank, they are one of just a handful of institutions where they have both a female governor as well as female deputy governors. And that obviously helps them achieve a higher score in the index. And if you look at some of these central banks, you'll notice that it tends to be the smaller economies or central banks of smaller economies that score well. This is something that we've observed over the past few years. Again, there could be many reasons contributing to this, but one of them could be that countries with smaller populations may perhaps need to exhaust their workforce a bit more and perhaps maybe more welcoming to female workers. But that's just one potential driver. There could be other things creating this pattern. Looking at scores by region and an aggregated global score. So these are calculated as an average of the individual central bank scores, but they are also weighted by the size of each economy to reflect the influence that central banks have on the global economy or the level of influence that they might have. So earlier we've seen the improvement for the central banks overall, and we'll see in this breakdown which regions are driving that. So if you look at North America, there's quite a spike from last year. So when it comes to the Bank of Canada, they welcomed a female senior deputy governor and a female deputy governor in the past year. So that contributed to an increase in their score. When it comes to the US Federal Reserve Board, which forms part of the North America score, this is actually because of the departure of Richard Clarida and Randall Quarles from their posts as vice chair, allowing the score to move up. This will probably move up even higher next year once some of the female appointments to the US Fed Board get confirmed by the US Senate. Another region where we see some clear increase is in Latin America and the Caribbean. So in Latin America, this is actually the region where the top 3 biggest risers in our central banks are from. So that's Honduras, Chile, and Mexico that had some of the biggest increases in score. A big part of this is because they had female governors appointed over the past year. We also notice something here about Europe where the score has declined, and we discussed in the report the different drivers for this, but one such driver is change in post in the Bank of England. So the chief operating officer used to be Joanna Place. She was replaced by Ben Stimson, contributing to a decline in that score. Moving now to the sovereign funds and the pension funds. Here we have the top scorers for those 2 institution categories. So here for the sovereign funds, we actually have the top 11 because we have a 3-way tie at the bottom. For the pension funds, we have the top 10. You'll notice, if you're familiar with them, that the top ranked institution for both are actually Australian funds. So we have the Victorian Funds Management Corporation and Aware Super, an Australian pension fund. You might also notice that there are quite a few US funds in both sets of top scorers. When it comes to the Australian funds, we note in the report that this could very well be a reflection of the Australian government's own drive to increase female representation in boards. So they've set metrics and targets for the proportion of both genders in government boards, and we can safely assume that the rest of the financial industry might be following from that lead, or at least it's demonstrated by VFMC and Aware Super in this instance. One thing, though, that is different between these two institution types is the scores themselves. So if you'll notice with the sovereign funds, we have VFMC with 97 and the Texas Treasury Safekeeping Trust Company with 89. So the top two scoring quite well and close to 100, but the rest of the top 11 actually have scores that are below 70, so quite far, a big gap there. With the pension funds, and this probably explains or partly explains why pension funds as a cohort score better, you'll see that the top 10 actually have much higher scores than their counterparts in sovereign funds. So again, there are many reasons that could be contributing to this, but one thing to remember is that when it comes to sovereign funds, there's probably one or two sovereign funds in every country, whereas when it comes to public pension funds, they're much more in number. So it's a much larger industry. It's a much bigger employer of individuals in general. So that could be contributing to why they're able to hire more women. Now, when you look at the commercial banks, here is where the scores are actually much more even and much closer to each other. When you look at the regional comparison on the left-hand side, you can see that the regional scores are not actually that far from each other. We see a range here of about 30 to 46. So not a very big range. If you would compare it, for example, to the central banks earlier, which you saw some really big regional disparities. Even in the top 10, you see that although no single commercial bank scores over 70, all banks within the top 10 are actually quite close to each other. So this is one way to interpret this is that commercial banks are more consistent when it comes to their approach to ensuring female representation in their leadership. It could be that because over the last few decades, commercial banks have been under more pressure or more scrutiny when it comes to ensuring female representation compared to their public sector counterparts, and we're seeing the result of that in that actually no single commercial bank scores 0 in our index. So every bank in our commercial banks index actually has at least one woman. So that's quite good in terms of their consistency as a cohort. I'm going to stop there for the index findings. I'll move on to the second aspect of our research, which is a survey of central banks that we conducted. And this year, our survey focuses on another important issue when it comes to female empowerment, and that is financial inclusion. We think of financial inclusion as something that's very much a gendered problem. Out of all of the unbanked individuals in the world, 56% are women. So there's a greater share of women facing difficulties in accessing financial services. And with this year's survey, we wanted to see if there's more that central banks could be doing to improve the situation and to ease women's access to financial products and services. We have to bear in mind that central banks, aside from helping shape monetary policy, they are also the institution, or they tend to be in most jurisdictions, the institution supervising financial service firms, which means that they can very much influence the level of activity around financial inclusion, and they have access to a wealth of data that could be helping inform initiatives around helping women access banks and other financial services. So one of the questions that we asked in our survey is whether or not central banks or an equivalent institution within their jurisdiction have a national strategy for financial inclusion, and whether those national strategies have provisions that are aimed at increasing women's financial access specifically. Less than half of our respondents said yes. So only 40% have female-focused strategies as part of their national financial inclusion programs. So this is an area where we think that central banks could be doing more, at least based on what our sample has shown us. And one way they could be doing that, as I mentioned, is through the data that the firms they supervise are reporting to them or are sharing with them. So we asked our respondents whether or not financial institutions in their jurisdiction are reporting to them gender disaggregated data about their financial products and services. So for example, when it comes to credit or loan products, are you receiving information about your firm's customers, and is that information disaggregated by gender? So less than half of our sample said that they were receiving this information in a gender disaggregated manner. We asked the same question around interest rates charged, average amounts of loans disbursed, repayment rates. So for these statistics and metrics, it's even lower. So just a third of our sample are receiving information about interest rates in a gender disaggregated way. So why are we asking central banks about whether or not they're getting this data in a format that's broken down between men and women? Well, because we think that the first step in understanding barriers and understanding a problem is seeing where the gaps are, seeing where the disparities are. So receiving information about women's access and men's access specifically, that could help identify where women can be supported more in terms of tailoring products towards their needs and towards the barriers they face. Another aspect that they could be gathering this information from is that when it comes to information about customer complaints. So we asked the central banks, do financial institutions report to you data on customer complaints, and is that data disaggregated by gender? So about 77% of our sample said that yes, we receive information on customer complaints, but only 15% overall said that that information is disaggregated by gender. That means that only 15% of our sample have some insight on what it is that women are concerned about or are complaining about, and what men are concerned about. So again, this could be one area where central banks could be encouraging the firms they supervise to look into these issues with a gender lens. But at the moment, they're not able to do that, or at least they're not receiving information about it. One area where this could have a tangible impact or information like this can be helpful is when it comes to the types of assets that are accepted as collateral for loans. So we asked our respondents what sorts of assets are accepted as collateral in their jurisdiction. And as expected, all of them said that real estate and other immovable property are accepted as collateral, but a smaller share of our respondents said that they accept other types of assets. So why is this a challenge, a problem for women? So we know that across different countries, different jurisdictions, property rights are not always equal between men and women. So it could very well be that in some countries, women aren't able to access loans simply because they are not owners of real estate or owners of immovable property. And that is something that central banks could be looking into if they had information about what it is that is hampering women from accessing some of these credit products. So I am going to stop there. There are other questions in the survey that we asked our respondents, and you could read all about it in the report. And of course, that's also where you can see the finer details of our scoring for the Gender Balance Index. At the very end of the report, there's a full ranking of all the institutions that we cover. So we hope that you'll download it, read it, and have a look at how institutions you're interested in are performing. Have a look at the issues that are permeating the financial industry when it comes to gender equality and female representation, especially in leadership. And we hope that you can be part of the conversation around this and help us identify the solutions that we need to really improve this picture so that we're not limited to women just leading 14%, such a small number of all the institutions we try to cover. At this point, I'll hand over back to Clive, who's going to lead us through the panel discussion.
Thank you very much indeed, Kat, and thanks to you and your team for all the hours and days and months of research that have gone into compiling a fantastic and thought-provoking set of data and results. The index is not meant to be easy reading. It's there to provoke. It's there to try to encourage. So well done as well to all the institutions that rank well in the survey. If our panelists could pop their cameras on now, that would be great before we kick off the discussion, and I will introduce them all shortly. And I think it's just worth reflecting before we start the discussion, though, on some of the things that we found there. Isn't it amazing that in 2022, there are still around 10% of the financial institutions that we surveyed who have no women at all in senior representation? It's extraordinary. And the fact that there are substantially more institutions in our ranking system that score 10 or less than over 70. And these are things I'm sure we're going to discuss during our panel on what could be better. Just one other stat that Kat didn't mention, this is a gender balance index. So it could be, you might argue, that one of the reasons that the institutions score more poorly was because they have more women than men. Well, I'm going to come back to that magic number 14. There were 14 institutions out of 335 that didn't achieve balance because they have more women than men. So 14% we talked about in terms of leadership. This 14 is, I think, less than 0.3%. So on that note, we're going to kick off our panel discussion. If you want to ask questions to the fantastic panel that we have brought together today, please do. The way you can do this is through Slido, which you will see hopefully somewhere on your screen if you are listening in. We will be reviewing those questions and putting them to the panel as we go along. But we really do want, we know we have hundreds of people on the line, we really do want to get your questions that we can put to our fantastic group of speakers that we have today. Let me quickly introduce them all. Hopefully we have them all here. We have Sharmila Hardy, who is Global Head of Banking at the International Finance Corporation. We have Martin Chihak, who is the Advisor, Strategy, Policy and Review Department at the IMF. We have Irene Espinosa, who is the Deputy Governor of the Banco de Mexico. We have Aniela Unguresan, I'm sorry, Aniela, co-founder of Edge Strategy. And we also have, I hope, Elizabeth McCall, who is a member of the Supervisory Board of the European Central Bank. And I know that Ratna will stay on the line and may well come and join in at some point. Just going back to start off with some of the findings that we've just seen. We could be a little bit depressed maybe when we see some of the numbers. Maybe we shouldn't be, but maybe I can come to you first, Aniela. You spend your career, your life, your time going into institutions, talking to them about how they can do better. What can we take from those results in terms of lessons that we can learn, and you know, what you see in your discussions about what works and what doesn't?
Thank you, Clive. And you know, just to echo what you said, well, of course, the numbers are not the best that we could have hoped for. But what I want to say as a reaction to the findings is that we are definitely heading in the right direction, but we are not moving fast enough. And I think that the fact that we are heading in the right direction might give us the false sense that things will naturally evolve in and of themselves. And in some years from now, maybe for the 15th or for the 20th edition of the Global Balance Index, we will have dramatically improved scores. Well, probably, but we cannot wait that long. So I think that one of the interesting things when it comes to the findings is the fact that, yes, we do see an increased transparency when it comes to the numbers. We do see more granularity, and this pipeline type of approach. The report has started to go lower down from the top roles into the senior executive roles, and probably, we will not stop there. And the organizations themselves are looking at their entire talent pipeline and taking this long-term view of how to actually support diverse talent throughout their careers. So more data, better data, but also I think a call to action of moving from intention to bold, brave programs, and then to impact. I think that we often, of course, start by commitments. We start by making declarations of intentions. We start looking at those numbers, but we need to be more ambitious than that. We need to expect from ourselves and from the institutions to see those numbers increasing over time. So pipeline, we talked about numbers. What would it take for all the organizations that participated in the index to set some targets for the gender composition, both men and women? Like you rightly pointed out, gender balance is about men and women, and having maybe more women in the P&L responsibility roles, but more men in the support functions. So what would it take for the institutions to set targets for the gender composition throughout the pipeline that they aim to achieve in 1, 2, or 3 years?
Thank you, Adela. We'll come back to some of those targets in a minute. I think it's an important point. And just in terms of the discussion, we'll spend some time at the start talking about individual institutions that are covered in the survey and what they can do. And then we'll move in the second half of the discussion to more the policies for the broader empowerment of women and financial inclusion. Let me come to Irene next. Banco de Mexico, doing very well. You are the Deputy Governor, Irene. You have, I think, now your first ever female governor as well. Something's going right at your bank. What are you doing that's right, and what can people learn from what you're doing?
Thanks so much. Well, yes, I think we are going faster in the short term. Let me tell you that a few years ago, when I entered the bank in 2018, I was the first female in the Board of Governors. So it's really a recent evolution that we are seeing. In 2020, we also welcomed another female member in the board. And just this year, the new governor is a female, as we already saw in the presentation. So yes, I'm very proud that the governing body is now mostly represented by women. It's 3 out of 5. So I think this is a very good move. And I agree with what Simone de Beauvoir said, that patriarchy started when men wrote codes and laws. So having women on the board, I hope this can accelerate a gender perspective on all of our work in the bank. So I'm very happy to have that. So I think we have been evolved very, very much in the recent years, and we have now, since 2018, installed a diversity committee and an inclusion committee that is internal for the bank. And for example, this is really one of the immediate actions that we're taking as soon as a woman was in the board. Before that, there was no gender forum for discussion or anything in the bank. So I think this has been very good for the bank, and we are very committed. We have with the committee a policy, a internal policy that stands on 2 different pillars. One is the internal, and another one is the external side. And speaking of the internal, I think this is very much focused on the human capital and gender balance and in general equality. And we are committed. We are certified by EDGE. Aniela has been very close with us in the work. And I think those kind of commitments are of a continuous work and brings us to really setting targets and measures and so on. So I think we are on the right track. The numbers within the bank are not still at the level that we would like, but I think we are on the right track for that.
Thank you, Irena. Well done on that. Let me come to Sharmila next. Sharmila, we don't actually include multilateral development banks in our analysis, but maybe we'll fix that for next year. But perhaps you can share with us a little bit on IFC's own internal policies, obviously very much in conjunction with your colleagues at the IMF as well, I'm sure. But maybe you can tell us what you see internally, what is working and what you're trying to improve.
So IFC, of course, as being part of the World Bank, we are focused in also not just talking the talk, but also walking the walk, right? And we recognize that it's important when we have an agenda, we have the Sustainable Development Goal number 5, which is ensuring women's equality, et cetera, that we are also representative of that. What we used to have previously were KPIs or key performance indicators that were focused on the number of women in a particular department, in a particular unit, et cetera. Now we have actually moved a little bit towards the gender balance, because recognizing the fact that there will be certain departments or units, which was referred to by Kat, that are not the profit centers, which are maybe cost centers and compliance roles, which were traditionally quite weighted towards women, including human resources and compliance. Now moving that to a gender balance index forces people to look at and say, well, are we diverse, truly diverse? So that's one of the things that we have moved towards, which is ensuring there's a gender balance in terms of diversity. What we are also trying to do is, in terms of recruitment, of course, we need to make sure that the pipeline is there. That's something that we are really making sure that recruitment panels, interview shortlists, as well as hiring managers are aware of their own internal biases, maybe, that may be unconscious, and bringing that to the fore. So having this, being a private sector institution, what we recognize is we are run by people people who love data and so it's all evidence-based. So, and having these key performance indicators keeps us focused on what the goal is and moving towards that ultimate goal. We also this year are EDGE certified. We have actually moved to level 2, which is a wonderful thing. We are also focused very much now on ensuring there is pay equity, which is a very key part of the dialogue that we have internally. I used to actually chair we have a women's network within the IFC, and I used to chair that. And now it's co-chaired actually by our COO and our Chief Risk Officer. So we do a lot of stuff internally, which is very focused on ensuring that there is, making sure that there's opportunity offered equally to everybody, because it's when that opportunity is offered equally to men and women, then only will men and women have equal chances to rise through promotions and growth. So.
Thank you, Sharma. That's very interesting. Elizabeth, please, you're able to join us. I think we had 1 or 2 technical issues at the start there. Great to have you here. We were just reviewing the internal policies and strategies around improving representation of women at senior levels within the institutions who are on the panel today. Perhaps you could give us a quick overview of the ECB's approach on this.
Sure, thank you. And thanks for inviting me. These kinds of panels are really important because I actually think we learn from each other. I'm already learning in the few minutes I'm listening. So thank you very much. ECB, I'm the diversity and inclusion executive sponsor for the supervisory board of the ECB. And it's a role that I took on with a fair amount of humility. I'm coming as a first American to the European Central Bank, and what I'm observing is a very, very intentional approach to gathering information, putting policies in place, establishing targets for gender balance, because the fact of the matter is we're behind the curve. We've also improved our EDGE rating, which says a lot about the intentionality and the policies and the procedures that we're putting in place. But the fact is that we have a ways to go. We've got really two roles here. One is to emulate society, to make the halls of the ECB look like the streets of Europe. We have to have a diverse community across the board. And second is we regulate the financial services institutions. And we know from research that diversity at the board level and in senior management levels is incredibly important for diversity of thought, for managing risk, for mitigating risk, for not acting in an isolated way with a group think type of thing. So the kinds of things that we're putting in place are very much like Sharmila, focused on what the processes are, that the opportunities are there for promotions, that we have the ability to establish a pipeline and move people through those processes so that we reach targets, gender targets across the bank. But also when we're doing fit and proper assessments of the institutions that we regulate, looking at the collective suitability of the boards and looking at their diversity policies and looking at whether or not they're adhering to those policies, because that's about managing risk. I would say, just an observation about some of the processes that we've put in place. It's really difficult to make sure that we've got that pipeline of development. And there's, we used our own research department, for example, on an anonymized basis to go through our HR files and understand what's happening that might be impeding promotion opportunities for women at the bank. And the very interesting thing that we find is that women are self-selecting out of the processes. They're not raising their hands and saying, I want to move ahead. And so we've really been intentionally spending time looking at why that is. Is it about the parenting years that makes a limitation for a woman that wants to move forward? Is it something else? Is there enough support of that woman to and structure for that woman to be encouraged to be promoted? And maybe I end just this discussion with this little message and say, one thing important that we're finding is that the women self-selecting themselves out of the promotion processes are often doing so because they evaluate themselves in a different way than the men. They think they're not qualified. And they look at the job description, they say, I didn't yet do that. And one of the things we're trying to do is educate the women that it's not about whether you have that qualification, it's whether you have the propensity to learn and to move ahead into that qualification, because that's what promotion is. So I end there.
Thank you, Elizabeth. I think the point you make about being somewhat to some extent a role model, if you're in a supervisory role, if you're supervising other banks and so forth, is a very important one, and it very much comes to the heart of the origination of what the Gender Balance Index is. Before we move on to some of the issues raised, I just wanted to bring Martin in. Martin, again, I mean, we are obviously, let's not beat around the bush, the two men on the panel, but it's very important that we have this diverse viewpoint. You are involved all day, every day in policies involving the IMF in this space. How do you categorize what the IMF is doing internally and well?
So first, it's a great pleasure to be with you, Clive, and colleagues on this panel. Indeed, we are striving for gender balance. I'll ask my colleague Ratna Sahai to come because she's our expert on gender policies more broadly. So I mean, I can speak a little bit about what we do on the financial sector side. And one aspect is we're working on improving our understanding of the data, right? So we compile data on financial sector gender balance. This was now about 8 years ago, and I remember we were struck by the very low numbers of CEOs. So back then it was only 2% of CEOs and 20% of women on boards. And so we sort of updated these studies, and it's encouraging and heartening to see that our data are broadly in line with what OMFIF is finding in your study. So we see some progress, some improvements, but at a rather slow pace. So maybe I'll make 3 points and I'll get to your question. So one thing, I think we still need to better understand the factors behind the sort of slow progress and the impacts it has is on macro. So the IMF, again, it's, you know, our focus is on macro financial outcomes, and that's been kind of the linkage between the shares of women in leadership and macro financial outcomes has been the core of what we've been doing. So we looked at impacts on financial stability, financial inclusion, income inequality, and economic growth. And again, with Ratna and our colleagues, men and women. And we did find that there is an association with, for example, financial resilience. So we found this is quite important, and that's why it matters for the fund, because it can help shape our policy advice. And we try to control for a number of underlying factors why that's the case. We look at different measures of financial stability, you know, buffers, profits of banks. Why is that the case? I think some of you have mentioned the issue of diversity in the board, in diversity of thinking, so avoiding silo mentality. So that came up quite strongly. But it also is because of the underlying barriers in hiring, right? So I think that also, I think, leads to the relatively higher performance of these sort of more balanced board. So I think my first point is really we need to sort of do more digging on these transmission mechanisms. I think it's great that we have updated data on shares of women, but I think we still need to do much more to understand how this links. The second point I wanted to make is that we are trying to broaden the analysis beyond CEOs and boards, and I think it was great to see in the OMFIF report that you sort of broaden it to see better the pipeline. But I think there's a broader issue. When you try to understand why it matters macroeconomically, it's not just the CEO, the gender of the CEO, the gender of the board. It really matters for, you know, when you go to the bank to get a loan. You know, there's a number of studies, including some done here, that look at the micro data. What matters when you're getting screened for loans, and again, there are some studies showing that, you know, female loan officers have better results, both you know, statistically and economically, when it comes to loan performance and access to loans. So again, this is something that I think that your study definitely goes in the right direction, but I think we need to get a better understanding of the gender balance within the financial sector. Also, because of the sector itself is getting reshaped and moving into areas like fintech and technology industry, which is generally less gender balanced. So we have this sort of bit of a contradiction where there's a promise of digital financial services providing more access, but this part of the sort of new financial sector is relatively less gender balanced. So Ratna and colleagues have done some more digging into this part, and they found that indeed in the fintech sector, which is not covered by the OMFIF study, the share of women among executive board members is quite low, less than 10%. The positive news is that there is a link between the gender diversity in the executive boards in those companies in fintech and the measures of digital financial inclusion. So there's a bit of a promise. So certainly, I think this is an important part of I think the data gathering that we're involved. And thirdly, I think that as the DMD Sai mentioned in the introduction, the IMF plays a role through compilation of data on the financial inclusion in the economy. So we have the Financial Access Survey.
Martin, I want to come back to financial inclusion in a bit, if I may. So I'll just apologies for interrupting you there.
No problem.
I wanted to go back. Shawna, you mentioned about looking at roles. And I think we probably all agree that roles are important. But what can you do other than look at them? What can you do to actively encourage the types of roles which are, you know, as we said, more internal facing? More will be taken by, you know, that there will be better balance, that women will have access to more of those, you know, career boosting P&L facing roles. What can you actually do strategically in those terms? And then I'll come to the others on the panel to see what they're doing as well.
So I think there are two aspects to it. I mean, one of course, as you mentioned, is a strategic signal. Having sort of a woman on top certainly plays an important role. I think that there are also a number of sort of regulatory or legal and other barriers. But I also think there are very small things that we do and that we see in our practices. For example, when we do screening, it's important to look at CVs without gender and other identifiers. First, in my own practice, when we hire people, we put emphasis on anonymized testing in written form, where you don't know the nationality or the gender of the person who is applying. So I think small things in terms of our processes, where when you're selecting people, you don't start by sort of first looking at identity, but you look at the substance of what they do at their CV without identifiers. I think that's one kind of small thing.
Yeah.
I know my colleague Ratna may also want to come in on the sort of broader IMF question. If
well, let's come back to the broader IMF question, if I may. I just wanted to go back again to Sharmila, if I may, just on this thing about the roles, because you mentioned that there are things that you're doing within the IFC on this. It's something you can talk about, but how do you actually fix it? And then we'll come back to the rest of the panel. And what proactive policies can you actually have to change that?
So one of the things, as I said, we moved from the KPI from just number of women and increasing the number of women in a particular unit or a department to a gender balance. So assuming that there are some departments, and we know which ones they are likely to be, which were overwhelmingly a majority women, then we are forcing those department heads also to look into it and say, well, what should they be changing? And is that a good way to organize themselves? And they can't just sit comfortably and say, oh, I have 90% women, I'm good. No, it's not good. That's also a problem, because then that is seen as perhaps not as attractive for other genders. And that's something that we're trying to do actively. So moving it from just a number of women KPI to a gender balance KPI. The other thing that we have also done, and this is a little bit touching on the external part, Clive, but if I may, one study that we did, and this touches on really the private equity fund space, we did with Rock Creek, Accenture, and IFC did a study. And that also talked about gender diversification of boards. And what we found over there, that gender balanced boards, okay? Gender balance, when you have a gender balanced board or when you have a gender balanced LPGP, then the returns can be 20% more than non-gender balanced institution funds. Okay, this is just for the fund space. So this is something that we are actively now doing also, saying to our funds and wherever we have a chance for nominee directors, saying, well, we want to make sure that when we are nominating a director, that we are nominating somebody that is gender balanced, so that our nominees are at least 50% women versus 50% men. And then the other thing that we're doing internally is trying to say that mentorship and sponsorship is very, very important. This is a very key point internally, that we can make sure that the opportunities available to women are easily accessible to them. So making sure that we know there's an unconscious bias against, so we sometimes ask, so there's a bias for? So who are you mentoring? Who are you coaching these days? And that's something that we are also encouraging our department heads, our unit heads to look into that, because that's how you create the pool internally. And I think one of the things, I'm not certain whether we've actually achieved that, but we've also hired a specialized firm to look at how when we advertise, is our job description in any way biased one way or the other, or can that be made, the language used, can the language be amended to make sure that it attracts the people that we want to be attract? Because I think it was Elizabeth who mentioned, and we know this anecdotally, that women will apply for the job only when they have achieved at least 120% of the qualifications or the criteria required. Whereas men, 70 to 80%, they're like, oh yes, I can do it. So just pushing them and actively also then searching out for women and saying, here's an opportunity, have you thought of that? And that's something that I do personally all the time.
Very much echoing what Elizabeth was saying earlier as well. Ratna, you've been listening closely to what we've been saying here. We'd love to get your thoughts at this stage.
Thank you, Clive. Let me just add, I mean, a lot of things that have been said really ring true, but let me just add to a few more initiatives that can really work. And we've seen that even in our own organization. So one is, women are not saying just promote us, promote us. They are saying give us the opportunity to shine, which means that very consciously department heads or managers should help find high visibility assignments. So they're given the opportunity to shine. That is absolutely essential. That's number one. Number two, I think at the IMF, and that must be true in other financial institutions, we have country teams, we have regional teams. We need to make sure that these teams are gender balanced too at the lower level, so that when they go and meet with the authorities, the IMF also looks like it is walking the talk, So that's another important aspect. A third one, and this has been very close to what I myself have observed. I've served on several committees where we select managers at the IMF. And systematically, what I have found is that women tend to undersell their achievements. It's close to what Sharmila is saying. And therefore, I do believe that some training of how to present yourself is essential for both men and women, but I completely believe it's needed much more for women, how to present themselves. This point on mentorship and sponsorship, there are studies that show that just having mentors doesn't quite work. So you really have to go to the other model of sponsorship. And I think that's where institutions need to go. And a final point that I want to make is that, because women bear the burden of both childcare and elder care, let me add that, I believe institutions should find ways to support their staff, whether they are men or women, in childcare and elder care, whether directly on their own premises or outside. So let me stop.
Thank you, Ratna. Interesting on appointments, and maybe Aniela, I can quickly come to you on this. Certainly, when we were doing our first set of research amongst commercial banks last year, and I know there are no commercial banks on this particular discussion, but I think it's important. What we saw is they had much better female representation at board level than they did in executive level. So one could say, optically, are they slightly massaging the numbers? Are they trying to pad the number of women out? Is that demeaning to those women holding those board roles? But should we be worried if it seems it's easier to appoint externally to non-executive roles women than it is to actually promote them internally?
So I think, Clive, that we need to start somewhere, right? And boards are those very visible parts of the organization, the ultimate governing bodies that decide on major strategic decisions. And women who are qualified to sit on somebody else's board, they are definitely at the pinnacle of the pipeline of another organization. So I think that it is definitely a very positive sign to see women in the board, but we should not stop there. And again, we should not assume just that by just focusing in an intentional, prioritized, and measured way to ensure that there is gender balance in the board, it will trickle down in the pipeline. It does not. So I wanted just to echo what Ratna said, because she mentioned a very important word, I think, which is career critical assignments. So, to the extent to which organizations are extremely disciplined in mapping which are those career critical assignments that make diverse talent ready for bigger jobs, whether they are P&L responsibility jobs, or ready to sit on executive teams, or ready to sit on boards of other organizations. And they are mapping the mechanisms allowing diverse talent to have access to those career critical assignments that will build the P&L responsibility roles pipeline. time. And I think that coming back to this idea of, the importance of visible roles, one of the things that we have found out is that it is very important to talk about what those highly visible roles entail. The world has changed dramatically. And in the financial institutions, the nature and also the impact of some of those roles has dramatically changed and improved for the better. So we do see that it's not trivial at all to think about clearly displaying through case studies, through role models, what does it mean to be in those type of positions and make those careers appealing for women and other diverse talent.
Thanks, Lydia. I'd just like to come back to our two central bankers on the panel and ask maybe to you first, Elizabeth. You talked about looking at roles that women don't apply for, and I wonder if there are other things, or how do you provide data on that? How do you analyze that, and other things within the organization that you can't analyze, you can't find the data on, but you'd love to, and maybe we as a group can think about how that might be done, or get the people out there thinking about it as well.
Thank you. That's a great question. I come to this discussion with the philosophy of the ECB, which is if you can measure it, you can manage it. So data is a completely critical component, and also driving where that data goes with targets and with scorecards. Those are things that we have put in place that are really strong. And several of the colleagues on the panel have mentioned this, but it's not just about having a gender balanced organization. It's about gender balance at the different levels, including at the highest levels, at the middle management levels, and at the bottom of the organization where you're developing the pipeline. So it's very interesting. We've had internal discussions a lot where people are very well intended. They want to reach these targets and they have scorecards behind them about how they're performing in their division. And they're saying, look, I'm competing against these other units for the few women that are here. Why is it that we can't just have a general target for the ECB instead of for my just for my department and my division? And the answer is that if we don't have the targets put in place for the different roles at the different levels, we'll end up with women in the traditionally more female represented units. And it's a fact that that's what will happen. There'll be a gravitation, and you won't have representation in the hard sciences, in the technology areas, in the areas that have been more traditionally populated by the men. So having these targets in place for each of the levels has been a really critical component. And the competition for the women is actually healthy. So, people are being measured and they know they're going to be measured and it's going to be part of their own performance. And so, that means that they have to recruit the women, make it something that they encourage. So this is a component. Sharmila mentioned this, but the job description is a completely critical component. And it's a piece that we have put in place. I think we can still do better at it, but broadening what the definition is for what the qualifications are is, I think, a completely important thing. And central banks, I think, in general, tend to be, it's probably a nature of our DNA. We're very precise and statistical, and we're very clear about what we think it takes to do the job. The truth is we're living in an environment, and Clive, maybe this answers your challenge here. We're living in an environment where the world is changing at breakneck speed. We're living in the technological renaissance. So it's not what you know how to do already that's going to qualify you for that job a year from now, 5 years from now. It's your ability to take on a new challenge and master it and learn it. So that means our job descriptions need to broaden in that regard and demonstrate, I think that very specifically, if we have job descriptions that ask candidates to demonstrate where they've met a challenge and learned a new thing, because you can then make an assessment about their ability to take on future challenges. This is going to be a key component. I also really believe that women have to help other women. We have to put a hand out to those behind us. I am a beneficiary of the women ahead of me, who were role models, but who also mentored and who made it safe for me to believe that I could do something that I hadn't done before. And I think much more of that has to take place, and we need our male allies also very actively involved in this piece of it. So I would encourage more thinking about data and using the data to drive outcomes. When I talk about these targets that we've put in place, it's not just the targets for how many women we're going to have in the organization. It's also what's happening at the intake and the pipeline and the promotion and recruitment processes at every level that we have to do. Last point, research shows that there is a rung on the ladder where we're losing the women. And this is where we don't get them into the senior roles. And that's at the middle management level, middle management, where, I think factually, you have a lot of the women, not all, but a lot of the women engaged in family responsibilities of various natures. And the tendency is to not raise the hand and grab that next rung at that point in time. So being extremely intentional about supporting the women, providing for flexibility in part-time in that period. It's a long career. And if we don't get them up to that middle management level, we're not going to get them into the senior management level.
Thanks,
that
Elizabeth.
piece.
Thank you, Elizabeth. I think that's a very good point. In fact, we just had a question come through. Irena, if I can come to you now, both on that question of data and taking into account what Elizabeth said about central banks and their love of use of data, and what data you're using and what data you would like to have that maybe is not available to you at the moment, or you don't know how to measure. And secondly, that point that Elizabeth made on retention. We talk a lot about hiring, but retention is also important, plotting that career path. A lot of central banks, I think, are very good at people having long careers, but making sure that retention is there as well.
Yes, let me start by saying that in the Central Bank of Mexico, we are still not at the point of having indicators of gender balance at the different in the different roles and also in the different levels. So we still are at more macro numbers of women in the in the institution. Of course, we track how many women are at the different levels, but it's not disaggregated by roles and more granular information. So that is the kind of information that we need to gather in order precisely to see where this tendency or this problem of self-selection of women is more accentuated. We are, although we are doing some other efforts to try to get there. For example, all of our recruitment processes and also in terms of promotion processes are open, competitive processes. And in those, we require human resources to ensure that we have at least a good number of women that are participating in those competitive processes, and also that we have at least one woman to be in the final list that is to be determined. Also, we decided to include at least one female in the panels. So that has made also a huge difference. And the profile language is also gender neutral. So I think on that part, we have been working very hard, very much, but still we need to continue with a lot of more gathering of information. We as many other institutions on the climbing of the ladder, we lose many women precisely on the in this age of parenting and of care responsibilities, and so there is something that we need to do. And one of the good things that we have learned from the pandemic is that flexibility and remote work is a very good option, and that we can include this kind of flexibility, as Elizabeth was mentioning.
Thank you, Irena. Sorry to interrupt. I'm just conscious of a little bit of time. So I want to, just before we move on to the broader issues of financial inclusion and empowerment of women, I just wanted to quickly ask Aniela, is there one, you've spent a lot of time monitoring all of this and building data and helping people. Is there one data set that you go, oh, I wish we could get data on that because that would be a game changer?
I think that to the extent to which we can get the fingers on the analysis of the pay equity status in an organization, that reveals all sorts of aspects that relate to the gender composition of the talent pipeline, gender composition across P&L responsibility roles, as well as the differences in career opportunities for different types of talent. So that would be my favorite.
Thank you, Anya. Let's just move on. And thank you also for some of the questions coming through. We'll come back to those when we've got a little bit of time at the end. But I want to just now talk about the external policies of public bodies, such as we have on our panels now, in terms of promoting women and giving them access to finance. Maybe we can start, Martin, just you can give us a little bit of insight into the IMF's approach for driving access to finance for women and women's entrepreneurship.
Well, thanks. So this is a big part of our agenda, and I think we've been stepping up this work with the World Bank and Alliance for Financial Inclusion and others. And again, I think to some extent we will have to repeat ourselves, because there's also the issue of data, right? So before you get to policy effect, I think you need to compile higher quality data. And here again, when we started this with Ratna and others, there were huge gaps in availability. But now we have sort of these two worldwide data sets, one from the World Bank, the Global Findex, and the other one from the IMF, the Financial Access Survey, which until a couple of years ago did not have any gender recomposition, but it does. So I think there was a major effort working with central banks, compilers to get the data right. It was a really high priority for us. I mean, not just for financial inclusion, but more broadly. So we are really immensely grateful to all the central banks around the world. It was a surprisingly difficult persuasion effort to get everybody on board. We found many countries have national financial inclusion strategies, and yet, with targets, and yet they don't really provide sort of administrative data decomposed by gender. So there was a lot of thought that went into, how you report and compile and sort of come up with numbers that any sort of semblance of comparability. And how can they be closed? I think we found that there are a number of sort of underlying policies, regulatory, legal, that need to be fixed, and many of them affect both men and women. So it's not that you sort of necessarily need to have a sort of separate policy for women and men. It's just women benefit more from financial inclusion, and then as a result, it has a much stronger effect on income inequality and macroeconomic outcomes. Again, there are some policies that just almost by default, they have more positive effect on women. For example, the digital financial inclusion that I mentioned, or in some countries, it's just individual ID and having sort of a digital ID for a person. So let me stop here. But again, I think this is the super important topic. I think that the work that you do is not in isolation, right? So you need to understand the CEO and board composition, but I think the reason why you're doing it is because you want to have a sort of broader effect on the society.
Thanks, Martin. Shamala, I know this is an area that IFC is heavily involved in as well. Certainly making sure that female entrepreneurs and SMEs and so forth have access to finance, that and that is a huge way to promote more access to finance and economic growth as well. Talk us a little bit through some of the things that you've been doing recently at the IFC in that regard, and what you're continuing to learn about what more can be done and what's needed to be done as well.
Yeah, so we have traditionally very, very much focused on the base of the pyramid. So it's really focused on the micro enterprises, because that's something that we know women are very much present and prevalent in micro enterprises. So supporting microfinance institutions, both through lending as well as supporting them through advisory capacity, has been a very important focus of IFC. We have built a pipeline, commitments of $25 billion, and we have right now 1.8 billion in outstandings. But when you think about just the numbers, don't focus on the dollar amount, but that the fact that we have supported 47 million micro enterprises is something that's worthwhile. What now we are focusing on, because what we also recognize based on our own studies is that micro enterprises are good for subsistence, but they don't really help. They keep people out of poverty, but they don't help them go up the ladder in terms of increasing prosperity. So what now we're working on to see is how can we help fill that missing gap between micro and to the SME level. And one of the things that we have very much done successfully, actually quite well in India, is helping a number of microfinance institutions transform into banks, because that's also an important facet that we need to be recognized, because when they become banks, they can take in deposits and they become more stronger, and then they can help their clients move up the ladder. So that's on the micro side. In conjunction, and I would be remiss if I didn't mention this, when we are helping microfinance institutions, one of the aspects that we are very much, which is I should highlight, which is very important to us, is ensuring that the microfinance institutions are operating under responsible finance principles, because that's the other issue that we know. There can be high indebtedness and stuff. So we are very careful about that. Then talking about the SMEs, we of course support SMEs. We have a huge portfolio of SMEs. In that, we know that the finance gap for women SMEs is 1.5 trillion. What we have done recently, not so recently, I would say in 2010, is when we started focusing on women SMEs and created a program called the Banking on Women program. We got some seed money from the Goldman Sachs Foundation, the Goldman Sachs 10,000 Women. They gave us $43 million with a challenge. And they said, we want you to use this $43 million to leverage and mobilize up to $600 million in financing for women. And you should reach at least 100,000 women. We have, I'm very proud to say, we have reached 144,000 women. We have not yet depleted those funds. The 43 million is still there. Half of it is still there with us. And we have used that money to mobilize $1.7 billion in financing for women, just using that 43. But we have a portfolio of 3.2 billion now, which is focused exclusively for women SMEs. So that's something that we do directly, meaning through lending to financial institutions. And the way we do that is really encouraging, again, data, right? Data is important. Pointing out to the financial institutions that this is a market segment that they are forgetting and that they're leaving money on the table by not taking into account this market segment. So that's something we go out and we map the market and say, this is a market opportunity. Hey, banks, if you are able to tap that market opportunity by creating products and helping, and that's what we do. We help them create products, both from a deposit perspective as well as access to credit. We have shown them anecdotally and with evidence that women are more sticky depositors. They're very loyal customers. The word of mouth reference is excellent. But most importantly, despite the myth that women are risky customers, we are shown with our data that NPLs to women SMEs are significantly lower than to SMEs in general. So that's something, it's 100 basis points difference, which really carries weight.
Thanks, Sharmila. Thank you. And then we'll come back to some of that data and some of the stuff that we saw in our survey that Kat presented earlier in a minute. Just to come to Irena, in terms of Mexico's strategy and policy towards making sure that women in what can become entrepreneurs, can have access to finance and SMEs, is that part of Banco de Mexico's mandate? Is it something you get involved in? Is it something that you have policies for in Mexico?
Yes, we are involved, although we have to cooperate with other financial authorities. And I think this is something that is very important in terms of the financial inclusion. It's always like a shared responsibility. And so collective action is very important to be promoted and to have the same view. So we do share that responsibility with other authorities, and we have actually internally a financial inclusion committee, and also we participate in a national financial inclusion committee with the other authorities. So there is really a very good governing coordination process with these other authorities, and we stick to the national financial inclusion strategy. But I would say that Mexico is still very far away from, in general, financial inclusion, but especially for women. And actually, after the pandemic, most women lost their jobs, lost their income. So this has really affected very much to women. And another factor that is affecting, of course, is the presence of women in rural areas. And that is a barrier for women to access. No? So I think that I agree, and again, agree with all of my colleagues in terms of having information and gathering information is crucial to understand what are the social and the economic barriers for financial inclusion, and that is the work that the National Committee is doing, and we are working on that.
Thank you, Elena. Elizabeth, it's very easy to think of financial inclusion and access to finance for women as a developing market issue. It's not just a developing market issue at all, is it? It'd be interesting to hear what the ECB's policy here is.
Thank you. Thank you. I mean, first, you're right. It's an issue that affects all segments of society. The economic well-being of all of the citizens of Europe is certainly an important part of the overall mandate of the ECB. We don't have at the ECB a supervisory mandate for financial inclusion per se, but I would just comment on a big effort that we have underway right now, which is focused on studying whether adoption of a digital euro is something that is something that we should do down the road. So there's a great deal of strategy review taking place about an ECB digital euro. And, a digital euro would reduce the cost of transactions. And in so doing, it would foster financial inclusion by aiming to make digital payments available to those who aren't currently connected to the financial services sector. And Sharmila is right about when she says that, you want to make sure that for the development of prosperity, that having access to financial services is an important thing. So enabling users to do purchases across all of the countries and all of the outlets in the euro area by using a digital euro is something I can definitely see would help foster the inclusion. Payments, I think, is the next area for us.
Well, as you may know, it's an area that certainly at OMFIF we spend a lot of time looking at the ability of financial inclusion challenges be changed by the advent of digital currencies. I think that's a whole other discussion that I'm sure we'd love to pick up with everyone on this panel and others as well at a future date. Ratna, just going back to the survey findings that Kat presented earlier, it still seems extraordinary that how many governments, countries don't have specific policies on this. What can be done to change that? Sometimes, certainly when we were doing the research, sometimes it's quite hard to find out who does actually have authority, who has supervision. Often it sits in many different places. Is there a winning strategy here? Are there steps that countries who obviously would love to promote this can put in place, or that you see are working?
Yes, Clive. I think one of the most important work that institutions like ours do is publish reports, right? And people can see which countries are progressing well and which countries are not. So one is simply to praise those countries that are doing a fantastic job, and we hope there's a demonstration effect. I think there are several things to be done. I mean, one is, I really think that what was shocking that I found from Kat's presentation were facts that related to, data on complaints, for example, as to how few organizations and financial institutions actually collect such data, let alone pass them on to the supervisors. So one key thing that needs to get done is collecting much more granular data, more qualitative data beyond just the numbers. And one key message is indeed to both the supervisors of countries and to the financial institutions to collect such data. We are, of course, contributing to this. We are actually ramping up our financial access survey by asking for data such as, what is the interest rate charged for women versus men entrepreneurs? These are really important numbers. So that is one. The second one is what we are doing right now, just raising awareness and encouraging governments to institute policies, first of all, by collecting good data. I think the ED certification is a very good initiative, and I want to congratulate Aniela for that. In our case, and I think in other cases too, we want our country teams to just go to these countries and raise awareness, ask for more data, ask for more analysis, volunteer to help country authorities do the analysis, which we are happy to do. And I think we are going to see change, but just having, obviously the voice at the top matters tremendously, but it's not sufficient. More needs to be done at all levels. Thank you, Claire.
Thank you, Ratna. I think it is interesting that, clearly in this area, data is there. It just needs to be asked for, and it needs to be aggregated, and someone needs to take responsibility for it. But the banks have it. So there's a lot we could do. Shamila, I saw you sort of nodding along when Ratna was talking there. You obviously agree.
Definitely. I definitely agree with a lot of the things that Ratna mentioned. And since I have the mic, maybe I'll say one aspect that is really important that I would like perhaps, OMFIF and the central bankers here to definitely collect is this issue of housing and housing finance in particular, and data on that, gender disaggregated data. And as Kat pointed out, one of the reasons you can look at it from two aspects. One is the aspect of creating wealth, right? It is such an important piece, especially in developing countries. This is such an important piece of wealth creation is the house. But it can also be used as a productive asset. We know for women SMEs, it's a home, many of them are home-based enterprises. But then we also know if they want to grow their business, they use that. Real estate is a very important piece of collateral. What we are finding as we are trying to increase housing finance for women, we don't have data. We don't know. And what should we be looking at? Should we be looking at who holds the mortgage or who holds the title? Is that equally important? Which is more important? And then what is the connectivity to SMEs in general? So these are very important things. And we know there are some legal issues surrounding these, why women are not in owning more homes, but there are also many cultural issues which are very difficult to overcome. But really getting data for me would be so important. And the other aspect, Clive, that I mentioned before, we need to find data from the fintechs, from the e-commerce platforms, from all the embedded finance platforms that are out there, because that is the future, especially for women and women SMEs, because of small ticket sizes, this is the future of finance. Is going to be in their hands. And we need to be able to corral that data and show that data, and to just say these things are run by algorithms, but actually, come on, there's a human component to the algorithm. And unfortunately, sometimes that human component is a male human component. So really getting that data. So two aspects, I will leave that. It's like data on the non-bank financials, and which really I'm talking about the fintechs in particular, and then the housing. Those are the two areas for me going forward that I would love to see data on.
And I think it was very interesting in our survey looking at portable assets as well, which are often the ones owned by women in developing markets, and the fact that, you know, how often they are not accepted as collateral. We haven't really mentioned gender pay gaps, and I think we should. And we just had a question come through which talks about the cumulative nature of financial gender gaps over time and whether measures are being taken to close the pension retirement wealth gap at all. Aniela, I wonder if you can give us your take on the progress on gender pay gap first, and then we might quickly get into the bigger picture of the pension retirement question.
So one of the most important things in tackling these gender pay gaps was the ability to talk about those. And I think that, you know, opening the way were a certain number of governments and governmental institutions. The moment the UK government started to mandate the obligation to report on gross gender pay gaps, right? And that created a huge sea of change and a huge transparency on the topic. Then, you know, once you start to be able to be transparent about it, then it is very important to be very systematic about how do you measure it? What are the remediation strategies and the remediation processes you put in place? And then how do you equip in an organization line managers, people that have those conversations every day with their team members on equity and pay equity? And equally, how do you make conversations around pay equity very natural? We work with a number of organizations that give their employees the possibility to raise their hand and ask for a pay equity review, just in the same way in which they ask a normal performance evaluation review. So the more we have the serenity to acknowledge that, of course, there are inequities, but measuring inequities don't create the inequities. Simply measuring them, talking about them, tackling them in a transparent way only creates the premises to actually close them.
Thanks, Anya. We're gradually running out of time, so I think I'd just like to go around each of the panelists in turn and just in 1 minute for each of you, just give us your view on how positive and optimistic you are that the pace of change will increase, and that by the time we do maybe the 19th GBI 10 years from now, we'll be producing much more encouraging and maybe even balanced numbers across the different industries we cover. Elizabeth, maybe I could come to you first.
Very optimistic, and maybe largely because I see so many of the male allies grabbing hold of this issue and making it an important objective. So I have a lot of optimism that we will, by the 19th, have a lot of progress. Fantastic.
Irene?
I join Elizabeth, and I think there are huge opportunities and new trends and technology and many other social issues that will be pushing for more progress and more rapidly.
Thank you very much. Martin, I'll come to you next.
I'm very, very optimistic, and it's not. I think we all kind of gravitate back to data, but my point is about the metadata. I think about 10 years ago, when we started on financial inclusion, we had almost no data. I think now the data sets have improved quite dramatically. So I agree with Aniela and others that, you know, you need to have the data first, and I think we made huge progress. So I'm quite optimistic on that front.
Thank you, Sharmila.
I am cautiously optimistic, not because I believe that organizations are going to effect a change, but mainly because I think these changes are coming through society. When I look at my younger team members, and including my daughter, who is in her 20s, and her friends and her boyfriends, and they are aspiring to a more even sharing of responsibilities beyond work. So it's at home, because that's the key that nobody has touched upon. I mean, we touched upon peripherally, but the care responsibilities that are on women, I think more younger men are making it they want to participate in that, which is a great thing. And we see that in terms of paternity leave, et cetera, being offered by several organizations. And hopefully the pandemic has left organizations losing the restrictions on organizations, thinking that work continues irrespective of whether you do it at home, whether you do it in the office. And this availability of flexibility will help us all going forward. So I'm optimistic, yes.
Thank you, Sharmila. Aniela, can I come to you next?
I'm more optimistic now than I was more than a decade ago when I started to work with Edge. And I think that, as it was mentioned, I think that one of the greatest reasons for optimism is the fact that over the last decade, the issue has firmly migrated from a social issue to a business issue, from understanding the growth potential that sits for companies, communities, economies as a whole. I do think that sovereign funds, pension funds, ESG investors have a crucial role to accelerate those trends. And I think that that can move the needle so that by, the next edition, we can be all extremely optimistic about the pace of change.
Thank you, Aniela. And last but certainly not least, Ratna, it'd be great to get your closing thoughts, please.
Okay. Is that me, Clive?
Yes, please, Ratna. Yeah.
Okay, sorry. Okay, so my closing thoughts, I'm going to have like 3 key messages. One is to ourselves at the IMF. So what I want to say is that we have done really well in terms of top leadership. The last 2 managing directors appointed by the board have been women. 2 of the 4 deputy managing directors are women. Almost 40% of heads of department, but we have a long way to go. This was spoken to before on developing the pipelines in middle management. So that's a message for us. A message for country authorities, central bank governors, finance ministers, leaders of the financial institution. I would really urge them to not just collect more information, as you said rightly, Clive, they have the information, but to report them. And they need to find much more granular data, qualitative data, because as everybody says here, data is the basis of good policy making. And the third message is to ourselves around this table. I am so encouraged, so optimistic with the discussion we've had. I think collectively we can together do a lot in advocacy, in awareness, in analysis, and providing policy recommendations, just as we are doing right now. And we can do this towards greater fulfillment of realizing women's potential in all walks of life. So let me stop right there. Thank you, Claire.
Thanks, Ratna, and thanks for all the panelists. I'm just going to start to wrap up now as we're running out of time. I mean, it's very clear in this discussion that the issue of data is a big one. And if OMFIF's small amount of data that we've been able to produce in the GBI provokes thoughts or efforts to do things differently and better, then our work has been worth it for sure. And clearly also the sharing of knowledge, such as the group we have today, is extremely important. The policies that you're all putting in place, extremely important. And we look forward to the IMS very soon. The work that companies such as Aniela's and Edge do, also extremely important. And it's very clear among the panelists today that they value it very much indeed. So well done, Aniela and the team at Edge. Congratulations to everyone who ranked well in our survey. It's not often that OMFIF does rankings, but these ones we do, and we promote them extensively. So well done to those that did, and best of luck and more courage to you if you want to improve your ranking over the next 12 months or beyond. If you've been very engaged and interested in this discussion, and you happen to be in London on May the 4th, we actually have a physical event to discuss these issues further, which is kindly being hosted by the Swiss Embassy. And if you want to be invited along to that thing, please do let us know. You can find all the details on our website. And just as importantly, perhaps most importantly of all, via the website, do please download the report. A lot of time and effort has gone into it. There's a lot to download there. There's a lot to think about. I'll say a few thank yous to our panelists, of course, to our partners today, to the team here at ONFIF. It is a passion project, not just the existing team. A lot of people have worked on it over the years. I should give a shout out to Danai Kyriakopoulou, who was our chief economist here, who was the pioneer of the GBI research. The team here today, Kat Usita, Natalia Ospina, and the rest, their fingerprints and passion will be all over this for many years to come. Thanks to all the team that put this together. I think this is an important piece of work. It's something ONFIF is very proud of, and we look forward to your feedback and continue the conversation. So to everyone for joining today, whether on the panel or listening in, thank you very much. And we look forward to seeing you very soon. Thank you.
Thank you, Clive.
Thank you.
Thank you.
Thank you.